Problems with the rearview mirror have forced now parent company Volkswagen to recall over 500,000 vehicles collectively in the US.
Volkswagen just recalled over 530,000 vehicles in 1 week. January 6, 2026. Rearview cameras failing, software glitches.
VW Group of America is recalling over 356,000 vehicles in the country. The NHTSA said it's due to a software error that can lead to problems displaying the rearview camera image.
And this isn't even their biggest problem. The company is staring at an $11 billion cash shortfall for 2026. That's $12.7 billion they don't have. Future vehicle development is frozen. Factory upgrades are on hold, and analysts are openly discussing bankruptcy for the world's second-largest automaker. This is the same company that sold 10 million vehicles globally in 2023. The same company that owns Audi, Porsche, Lamborghini, Bentley, and Bugatti. And right now, Volkswagen is fighting for survival.
Volkswagen is trying to soften the blow from US auto import tariffs of 27.5%, which have cost the company billions of dollars.
Back in 1937, Adolf Hitler ordered the creation of a people's car that every German family could afford. Ferdinand Porsche designed the Beetle. The first Volkswagen rolled off the assembly line in 1938. After World War II, British occupation forces helped restart production. By the 1950s, the Beetle became a global phenomenon. In 1972, Volkswagen surpassed Ford's Model T record with over 15 million Beetles produced. The company expanded aggressively. They acquired Audi in 1965, bought Lamborghini in 1998, added Bentley and Bugatti in the early 2000s, and purchased Porsche in 2012. By 2015, Volkswagen Group was the largest automaker in the world by vehicle sales. They operated 120 production facilities across 20 countries. They employed 650,000 people. Annual revenue hit $213 billion. Volkswagen dominated Europe, competed aggressively in China, and held steady market share in the United States. Then everything collapsed.
Volkswagen posted its first quarterly loss in more than 15 years, fallout from the growing scandal involving the German automaker, rigging the admissions of millions of diesel cars. That has hurt. Phil LeBeau has more now on VW's big loss and what's ahead for the German automaker.
September 18, 2015, the U.S. Environmental Protection Agency issued a notice of violation. Volkswagen had installed defeat devices in 11 million diesel vehicles worldwide. The software detected when cars were being tested for emissions and temporarily reduced pollution output. On the road, those same vehicles emitted up to 40 times the legal limit of nitrogen oxides. Volkswagen cheated. They lied to regulators. They lied to customers. And they got caught. The company's market value dropped $27.4 billion in 5 days. CEO Martin Winterkorn resigned. Volkswagen recalled 11 million vehicles. The EPA fined them $18 billion. Fixing the affected cars cost another $7.3 billion. Criminal investigations were launched in over a dozen countries. Lawsuits piled up from customers, dealers, and investors.
Fixing millions of defective cars will cost at least $7 billion, and as a result, its earnings for 2015 will be significantly lower than last year.
The Dieselgate scandal destroyed Volkswagen's reputation and gutted their diesel business just as governments began pushing electric vehicle mandates. Volkswagen was forced into the most expensive pivot in automotive history. The company announced a $160 billion plan to transition to electric vehicles over the next decade. They developed the MEB platform, a modular electric architecture designed to underpin dozens of future EVs. They launched the ID.3, ID.4, and ID Buzz. They built battery factories and signed supply deals with lithium and cobalt miners. They promised to beat Tesla, but the execution failed. The ID.3 launched with software bugs so severe that Volkswagen had to park thousands of finished cars and manually update them before delivery. The ID.4 entered the U.S. market at $61,050.45, pricing out the mass market buyers Volkswagen needed. And the ID Buzz, their electric revival of the iconic microbus, flopped so badly that Volkswagen canceled the entire 2026 model year due to unsold inventory. As of January 2026, the VW ID.4 is the slowest-selling vehicle in America. Dealerships are packed with electric vehicles nobody wants to buy. On September 30, 2024, Volkswagen issued its second profit warning of the year. Operating margin fell to 2.3%. The company's target is 6.5%. Profits dropped 64% year-over-year in Q3 2024. Revenue declined across all major markets. CEO Oliver Bloom told employees the situation was extremely tense. CFO Arno Antlitz said Volkswagen had been spending more money than it earned for some time. Plant closures were no longer off the table. Layoffs through early retirement and severance packages were no longer sufficient.
Up to now, it's several billion euros on our balance sheet. This situation cost this year, but it's more important to what situation we will come in the future. On the one hand side with the tariffs and maybe with a joint agreement based on our huge investments we could do in the US.
For the first time in Volkswagen's 87-year history, the company announced it might close factories in Germany. The news sent shockwaves through the workforce. 300,000 employees realized their jobs were at risk. Unions called it a declaration of bankruptcy. November 2025, German outlet Bild reported that Volkswagen faces an $11 billion cash shortfall for 2026. The company's supervisory board delayed approving the multi-billion euro investment plan that determines which new models get developed and which plants get modernized. Without that approval, Volkswagen cannot proceed with future vehicles or factory upgrades. The $160 billion earmarked for electric vehicle development and operations over the next 5 years now looks insufficient. CFO Arno Antlitz asked finance teams across the group to identify ways to bridge the gap. Options include cost reductions, scaling back investments, and selling non-core assets. Rumors circulated that Volkswagen might sell Bugatti, Lamborghini, and Ducati to raise cash. Mate Rimac confirmed he was in discussions with Porsche to acquire its 45% stake in Bugatti Rimac. A $1 billion offer is reportedly on the table. Volkswagen is liquidating the brands it spent decades acquiring just to stay afloat. Here's what nobody wants to say out loud. Volkswagen's probability of bankruptcy stands at 45% according to financial analysis firm MacroAxis. That's 8.72% higher than the consumer cyclical sector average. The company's operating margin of 2.3% is unsustainable. Annual vehicle sales in Europe are down 2 million units compared to pre-pandemic levels. Volkswagen holds about 25% European market share, meaning they're losing 500,000 vehicle sales per year. That's equivalent to the output of 2 major factories. Rising competition from Chinese EV makers is diluting market share and profits across Europe. U.S. tariffs, expiring EV incentives, and supply chain volatility are compounding the pressure. And Volkswagen's response has been to freeze investment, delay new models, and prepare to close German factories for the first time in company history. The human cost is staggering. Germany's automotive sector employs 835,000 people. Volkswagen alone has 300,000 workers facing 10% wage cuts. Collective labor agreements were terminated in 2025. Plant closures will eliminate tens of thousands of jobs. The Volkswagen plant in Wolfsburg is the largest automotive factory in the world. If it closes, entire communities collapse. Suppliers dependent on Volkswagen orders will file bankruptcy. The economic ripple effects across Germany would be catastrophic, and the German government, already stretched thin supporting other struggling industries, has limited capacity to bail out Volkswagen. Let's talk about why people stopped buying. The ID.4 starts at $39,995 for the base model. That's after Volkswagen slashed prices multiple times. But consumers can buy a Toyota RAV4 hybrid for $33,000 or a Honda CR-V for $30,000. Both are proven reliable vehicles with established service networks. Volkswagen's electric vehicles lack the brand loyalty, resale value, and charging infrastructure that Tesla offers. And they're too expensive for the mass market buyers who once bought the Beetle, the Golf, and the Jetta. Volkswagen positioned itself as the people's car. Now their cheapest EV costs $40,000. That's not accessible. That's exclusionary, and customers are walking away. Here's the part that seals Volkswagen's fate. They can't win in China. They're losing in Europe. They're irrelevant in the United States. The ID.Buzz was supposed to be their comeback story. An electric microbus with retro styling and modern technology. It launched at $61,545. Nobody bought it. Volkswagen canceled the 2026 model year entirely. They're sitting on so much unsold inventory that they stopped production. The ID.Vo is America's slowest-selling car. The company just recalled over 500,000 vehicles for camera failures. Quality is collapsing. Consumer trust is gone. And they're 11 billion euros short of the cash they need to survive 2026. So will Volkswagen shut down? Not immediately, but the trajectory is clear. Companies don't issue 2 profit warnings in 1 year, announce potential plant closures, recall 500,000 vehicles, and face $11 billion cash shortfalls when things are going well. Volkswagen is in managed decline. The question isn't whether they'll struggle, the question is whether they'll survive. Selling Bugatti, Lamborghini, and Ducati buys time. Closing German factories cuts costs. Freezing new model development preserves cash. But none of that addresses the core problem. Volkswagen makes cars people don't want to buy at prices they can't afford. The EV transition bankrupted their diesel business before the electric business became profitable. Chinese competitors beat them in the world's largest car market, and the $160 billion they spent chasing Tesla left them financially crippled with nothing to show for it. The recall on January 6, 2026 is a symptom, not the disease. The disease is a company that spent 87 years building a reputation for reliability, affordability, and quality, then destroyed all 3 in a decade. Dieselgate killed their credibility, the EV pivot killed their profitability, and China's rise killed their growth. What's left is a company with 120 factories, 650,000 employees, $11 billion in missing cash, and a 45% probability of bankruptcy. Volkswagen says they're restructuring. They say they're adapting. They say they're committed to electric vehicles and the future of mobility. But when your newest electric van sits unsold in such massive quantities that you cancel an entire model year, when your flagship EV is America's slowest seller, when you're recalling over 500,000 vehicles in 1 week, and when analysts are openly calculating your odds of bankruptcy, words don't matter anymore. Results matter, and Volkswagen's results are catastrophic. The people's car has become the car people don't want, and that might be the end.